our first speaker. So, Grace Smith has worked in the voluntary and community sector for over 20 years, during which time she served as a trustee, director and chair and co-founded a charity providing training and employability to support to people seeking work. Under her leadership, the organisation grew to become a major voluntary sector training provider in East London, attracting significant funding and winning major contracts. Grace has worked as a consultant in the sector for 12 years and set up her own training and consultancy company in 2004. Her portfolio includes local authorities, national umbrella organisations, and CBS networks. She also works with individual groups on development and building capacity. She has a wide experience in governance matters, compliance, and all aspects of organisational management. She's also recently established a social enterprise and an associated charity working in rural communities in Zimbabwe. Let's welcome Grace.
Hi everyone. I believe that some of you here, I've been told, are perhaps at the point of setting up a patient group. Some of you belong to fairly new patient groups, and some of you may well belong to very well established groups. So I hope I've got something here for everyone. And the subject that I was asked to speak on is governance structures. And you may wonder why you need a governance structure. And there really is nothing wrong with a group of people with a common interest getting together and simply forming a group to do something worthwhile. And some important things get done in that very informal way. But as a group grows and develops, and we've heard about wanting to have a stronger voice, then the group normally reaches a stage where they have to become a little more organised and a little more formal. And they will start engaging with other organisations, perhaps with commercial companies as well. And before long, you will find that you need things like a committee and a bank account and all those things that come with developing and growing. And when you reach that stage, it's important that you choose a structure which enables you to do the things that you want to do. And so what I'm hoping to do is just skip through and give you a little taster introduction of some of the structures that are available to voluntary organisations and some of the pros and cons and why you might be more attracted to one than another. So we're going to have a look, and I hope by the end of it you will understand the various legal structures available. You will understand the requirements of each and the responsibilities of committee members. So setting up a group. Some questions that you really need to ask yourself when you start to think about forming a formal organisation. So, what is our purpose? What are we setting out to do? And that really needs to be written down, and you need to think about it very carefully, because the decisions that you make in identifying your purpose may well affect the structure and the things that you can do in the future. And I would always say draw your purpose fairly widely so that you don't have to keep changing it every time you want to take on some new topic or some new project. Who is it going to benefit? Is it going to just benefit the people within the group, a self-help group, or is it there for some wider benefit? And we'll see the significance of that in a moment. Where do you want to vest control? How important is it to have charitable status? there are advantages of charitable status, but it also comes with some restrictions. So how will that impact on what you want to do? And are we likely to want to engage in significant commercial activity, trading? Well, we see that that also will impact on the decision that you make. So there are basically 6 legal structures. You may have come across some of them. Some of you have probably already adopted one or other of them. How many of you are in an established group already? Most of you. Good. And what I'm going to say at this point is please don't switch off, because as groups evolve and develop, you may well get to the stage where you think, are we really using the right model? And is it time to look again and perhaps change our structure? And I've given you a handout on this which will give you a little bit more information. There are some on each table. I do not want you to sit and read them now, but it's there to refer to later. And the first one is an unincorporated association. And any group of people that come together with a common purpose other than making a profit are in fact an unincorporated association, whether they know it or not. So perhaps a group of local people who walk their dogs and nod to each other every evening when they see each other on the common. They may perhaps have come together because there's a new bylaw about where you can walk your dogs and where you can't, and they want to make a case to the council. And they come together and then they think, hang on, we like doing this, we can exchange ideas. So they meet together to discuss local issues of interest to them. And then they think, let's club together and buy our dog food in bulk. And they do that, and they meet together once a month at the pub to have a bit of a meeting and a chin wag. They are an unincorporated association. No constitution, nothing in writing, but they have formed themselves into that association. I would say, once you get a bit more organised than that, you really do need something in writing, and it saves all sorts of headaches further down the line. A trust is a group that is normally perhaps administering a bequest, or it may be a trust that has been set up by a company in order to fulfil its charitable purposes or its social responsibility. And whereas an unincorporated association has a membership which is wider than the committee, a trust is only the sum of the trustees. But what they share in common is that neither of them has a legal personality. In other words, they are simply the sum of the people that belong to them. So, if an unincorporated association wants to hold property, it can't do it in its own name. It has to borrow other people's names. It cannot sue or be sued or enter into contracts in its own name. Bit of an issue there. So if, for example, it got into contractual difficulties, it can't be sued. Who is going to be sued? Anyone like to suggest? The individuals, the members, or more likely, if there's a management committee who have the day-to-day running and the decision-making tasks, then those are the people that would be sued. And so, first lesson is, there are very real responsibilities and liabilities involved in running an unincorporated association or indeed any voluntary organisation, and similarly with a trust. Now the first one that has what we call limited liability is a company limited by guarantee. A company, just like any other company, but limited by guarantee rather than by shares, because as a voluntary organisation, it cannot distribute profits, it doesn't exist to make profits, and so the members each guarantee to pay a nominal sum if it's wound up. Then that one is subject to company law as well as charity law. And now we have a new kid on the block, the Charitable Incorporated Organisation. Only introduced a couple of years ago, we've been waiting for it since 2006 when it was announced. Charitable Incorporated Organisations are a hybrid in that they have legal personality, they have limited liability, but they are only subject to Charity Commission and charity law. They have nothing to do with company law, and they don't have to fulfil the administration requirements of Companies House. So quite a neat one for some organisations that want limited liability. Community interest companies are a social enterprise mechanism, and they were introduced so that you could set up an organisation which has social benefit but can attract investors, and it can be limited either by shares or by guarantee. And then finally, industrial and provident societies, which are somewhat different in that they are regulated by the Financial Conduct Authority, and you can only set up one if you can show a good reason why it should not be one of the others. So, benefits of charity status, tax advantages. You do not pay income tax on your income unless you do more commercial activity than you are allowed to under the regulations. So for normal purposes, your income is tax-free. You enjoy business rate relief if you have premises. You have enhanced standing, which is particularly important when you're looking for donations. And it gives people a measure of confidence if you can have on your note paper registered charity number, whatever. And it also gives you increased access to grant funding, because some funders will only fund registered charities. The restrictions I mentioned, there is increased regulation and scrutiny by the Charity Commission, and they are hotting up on that. Limits on your trading activity, and that is determined by your level of income. And there are restrictions on payments to trustees and persons connected to trustees. So if you are a trustee or a member of a management committee of a charitable organisation, the general rule is that you can't be paid to be a trustee. You can be paid for services, so if you are doing work for the organisation, but only if it's in the best interests of the organisation, and if a minority of trustees are paid in any one financial year. In order to qualify as a charity, the organisation must have charitable objects, and those are set out within the Charities Act and include things like relief of poverty, relief of sickness, and a whole range. And then there's a kind of catch-all at the end of this list of 13 which says any other objects which ought reasonably to be considered charitable. And you need to show evidence of public benefit. And for that reason, that's why our little self-help group that I mentioned will not qualify to be a charity. If they're just helping each other and supporting each other, that is not enough to show public benefit. They have to benefit some wider constituency. And I imagine that the cures that you are looking to and the research that you're looking to promote would have a much wider implication than the people that just belong to your group. And you need to show an annual income above £5,000 in order to register as a charity. Although below that, you may still be a charity, but simply not required to register. Trustees must comply with audit requirements and must submit an annual return to the Charity Commission updating their details and reporting, and that usually means sending in a copy of their accounts. It's all done online these days. You must act prudently, lawfully and according to the governing documents. You cannot delegate responsibility. If you're on a management committee or if you are a trustee, you may employ staff, you may give volunteers certain tasks to do, but you always retain personal responsibility. And liability is unlimited, even if it's a company limited by guarantee, in certain circumstances. But that has been mitigated so that normally you'll not be held responsible unless it would be reasonable to expect you to be. You must be informed, and that means internal matters affecting the running of your organisation, but also external things, political climate, developments in research, the things that are going to impact on your organisation that you need to know about in order to make informed decisions. You have to act in the best interests of the organisation, even if you've been appointed as a representative from another organisation. And you need to avoid conflicts of interest, and that normally is around things like payments or where you've been appointed and may be torn between two different decisions. Company directors, very similar, elected by the members in this case, where the company is registered as a charity, the same people wear the two hats, both as company director and as trustee. And the director's liability is limited to the company assets, so long as they've not acted negligently, and that means grossly negligently, not taking advice when it was patently obvious that you should, criminally or in breach of trust. It is more restricted than the unincorporated association or the company limited by guarantee, and at the moment you have to follow exactly the model documents that the Charity Commission has prepared, but it's a very new organisation and we think that will become more flexible in the future. Community interest company must have social purpose, regulated by the CIC regulator, and cannot be a charity because it exists to make a profit. No restrictions on directors' pay. They can distribute profits and attract investments, but the assets are locked in. So you cannot just sell up the company and split it between you. Those assets have to be passed to an organisation with similar purposes. It's quite an interesting one, again fairly new, and often is used to set up a trading subsidiary. So that if you do a lot of commercial activity, it's worth considering that as an add-on. And that's all I've got to say, but I will take questions if you have some, and I hope that you have.